Good morning, everybody. Welcome to the Flow Show. It's ECB day. Hope you all got your sun colour charts ready, your tan charts ready to see what colour Queen's sunbed's going to be this month. We've got her to lie and look forward to. Well, I say look forward to. I'm not sure anyone's looking forward to it. Morning, Kate. You looking forward to it?
Good morning, Ryan. Yep, I've prepared the parasol, the sunscreen, everything, and it's the high mass for the Queen Santan fans and aficionados today. I mean, it's going to be so good, you know. Well, I'm sarcastic, of course. I mean, nobody can stay awake when she starts to preach.
No, exactly. As usual, I'll probably spend more time wondering about what she's wearing and whether De Guindos is going to open his gob or not. Actually, I think he's spoken once this year so far. The other
Yeah,
month, a surprise.
it's getting too easy a bit for him not to speak on any of the press conferences. So why not today take put a little penny on him speaking for at least 10 seconds.
Yeah, exactly. Right, anyway, let's get stuck into it and what's been going on. Well, actually, before I do, just want to make you aware we've got a 40% sale on joining our platform and chat room. As you can see there, just go to forexanalytics.com. No codes or anything needed. And you can get 40% discount on our monthly subscriptions. That's going to be running during the summer. It won't last forever, so be quick so you don't miss it. Right, cracking on. We've had a few more comments out from the US and Japan over this trade deal. Typical bureaucracy Japan, trade negotiator Akazawa says he's had no discussion with President Trump or US officials about how to implement this deal. We're not thinking about signing a legally binding agreement at this moment, as is the case with Japan. They've got all the outlines, but they want to know how to go about it and put it into effect. So they're a bit reluctant on that side. The US was pumping a big 100 Boeing purchase deal by Japan yesterday. Mr. Akazawa says that 100 Boeing purchase deal includes existing purchase plans. So not quite the big headline grabbing story the US pointed out yesterday. But anyway, we're still over the trade hump. So market less inclined to trade around those sort of headlines now, unless there's any shocks from that, of course. RBNZ Conway says tariffs are seen as a negative demand shock for the New Zealand economy, and the RBNZ is ready to adjust its cash rate as needed, and there's scope to cut rates if price pressures ease. So they're staying on the dovish front. Opposite to that, though, RBA's Bullock says inflation may not fall as quickly as they expect, and that the market has overreacted to the jump in the unemployment rate, which is still remarkably low. That's something I kept pointing out when everyone was up in arms about that jump in the unemployment rate. It's still at historic lows. She also added that they don't think the jobs report would have changed the rate decision, and continues to support a measured and gradual approach to easing. All that has got some in the market now questioning whether a cut will come in August. But Bullock sticking to her undovish stance, as she's a bit more of a hawk than others at the RBA. She was also pumping when they moved to a proper monthly inflation read, saying that board members won't need to preempt, if you like, their rate decision calls based on data that's very, very old, and they haven't got the fresh stuff. So they're going to be, I can't remember what the date is, I don't know if it's November, they really start to pump out the monthly data in earnest. They already do a semi-monthly number, we should call it. It's not really that widely looked at, but they're going to be picking that up, as I say. Okay, just on the RBNZ and RBA, got a little bit of divergence still in play there.
Yeah. it is so. Not that we would have seen it on the Kiwi dollar. Aussie Kiwi is a tad higher, but that's, I guess, more due to Bullock. She there's gonna have to happen a lot negative data for Bullock to go really dovish, I think, because she's a hawk by nature. So we need to take that into account as well. But yeah, the Aussie has crawled back some because we saw that Aussie Kiwi dump the other day. I think a lot had to do with liquidity as well. When you catch up on both the Aussie and the Kiwi on the dollar, as they both have done, there's a little less liquidity in the Kiwi, obviously. But yeah, I mean, there is a bit of divergence, interestingly, so that may keep that cross relatively uh, bid. Let's say somewhere around those low 109s there, your 50%, give and take a few pips, of course. Yeah, that may keep the Aussie Kiwi a bit bid. Um, on the rest, though, yeah, you were right in also saying that the unemployment is still at historically low levels. So the market has been repricing a bit. Also, their PMI came out in Australia pretty supportive of Bullock's stance. So no harm done for the Aussie, and the Aussie is doing quite well, even very well, I should say.
Yeah, very much so. We're looking like we've
But
definitely got a bit of a break up in the Aussie there.
to come,
Finally.
mm. And if I may, to come quickly back on that Japanese stuff, yesterday we spoke about it, and I said like, well, we didn't have too much response or comments from the Japanese side. It is starting to filter through that the US has announced something which the Japanese were either not completely aware of all the ins and outs of the deal, but for sure they haven't really put pen to paper yet, and I think we need to be a tad careful with that. And Nakazawa's comments were relatively clear, saying that they haven't signed it yet. And I think there's a bit to do with that famous $550 billion investment fund that is actually going to be at U.S. discretion, going to be handled by the U.S. So I mean, if Trump wants, he can even put it all into crypto if he would like to, and the Japanese, as Besson said, are only the banker, not the operator. And I think there may be a bit of venom in the tail there, on this deal. I still think we need to be a bit careful. Okay, the structure may be there, but the signature isn't done yet.
Yeah, and that could be. Well, we've yet to see what the full political fallout is in Japan and whether other parties agree to it or not, particularly after
Absolutely.
the election. So it's not a straight line, but it's just might be a different in characters between the US and Japan. The US obviously like to shout from the rooftops and shoot guns in the air. Japan need everything written down, double checked, dotted, crossed, signed, rubber stamped,
Yeah.
wax sealed before they even think they've got a deal done. So
And,
yeah,
and reading kanji is complicated, huh?
yeah, exactly. You know full well, mate. This has got 18 rubber stamps on it. It hasn't passed anything yet. So yeah, that's just something that happens in Japan. But yeah, caution still needed for that. Let's go on to some data. As Kay just mentioned, we've had the Aussie PMIs kicking off the round of PMIs for the new month. Manufacturing came in a healthy 51.6, up a whole point. Services came in at 53.8, up 2 big points on that. Japan, though, went the other way. Manufacturing fell into contraction, was expected to go up a pip to 50.2, came in at 48.8. So that's not good news. Services, though, improved to 53.5, and that's something we're seeing in pretty much all the PMIs thus far is that manufacturing is some minor ups and wobbles, but it's services that's really sort of gained so far from the PMIs. Let's get down to them if I can find them. There we go. So France, a miss of expectations on manufacturing, but it still went up 3 pips to 48.4. We're still in contraction, no change there. Services that came in as expected, increasing by a massive whopping pip over last month. Germany as well, manufacturing went up 2 pips less than expected. Services, though, went up a bit more, 50.1, beat expectations, and into expansion. The pan-Eurozone number pretty much echoing that, a tiny uplift in manufacturing, and services as well going up. Services there going up 51.2. On the other hand, the UK again saw a similar feature, manufacturing edging up a little bit, but still in contraction. However, services took a little bit of a dump, which was not good news, and a lot of the blame being put on the government for what's going on in the service sector at the moment. Increased costs, national insurance, higher taxes, all that sort of stuff, putting a bit of a clamp, shall we say, on businesses, and not creating a decent economic platform for firms to make money on. So it's not looking good still in the UK. I'm still sitting here wondering why I'm not long euro sterling at any price. Was waiting for a bit of a dip, didn't really get down to that 86 level. Now we're back up again. So okay, I'm feeling like I need to shut my eyes and just buy euro sterling at the moment.
Join me, mate. Come on, join me. This being said, I bought it a bit higher. I've been sweating yesterday. No, I'm roughly at the money right now. But yeah, we both had been waiting. I was a bit long. Took it off. It was okay, but then I rebought it a bit higher. I even went out of it yesterday, but then decided to buy it again when there was this whiff of a potential EU US deal. I think around 86 and a half, 86.40. That now needs to hold, and then gradually this could push higher. But as we've seen since the what is it like the that last move that we had around the 10th 11, we have been going a bit sideways. PMIs are what they are, to be honest. I was thinking, like, if you had those PMIs coming out today, yes, the Aussie PMIs are I think relevant, but if you look at the European PMIs, perhaps not as relevant, as there is this the market trying to figure out whether there will be a deal between the US and EU. So perhaps bigger fish to fry. But the even though still above 50, UK data all in all continue to slide, yeah. And I think that's maybe where we have to look at it. So yes, I think dip somewhere down to 45.50, which should in theory still be bought in that euro sterling. Obviously, if we break above that 86.95, 87, then we're probably going to do another leg higher, and then the question will come back: do I chase it or not? And that's why I prefer just to have a bit in it and see what happens. I still think we are on our way to higher levels, but it can be Grand Park Ross and go extremely slow, and have people actually be too patient in the end.
Yeah, exactly. I'm getting that feeling as well. I was looking at this move. I thought we might get it down to maybe 20s. Trying to be a bit greedy, maybe down to this little zone here. Never got there. Yeah,
It's not
I was
really
saying
rushing away.
that when we was down at 86. Well,
Yeah, it's not really rushing away, Eden. No,
no,
after we have done the big move from, let's say, 82s, 83s up to 87, we're building in a pause. But then if you look at when you start there in June, July, it is pretty much, we have seen the same thing. You start, well, actually, okay. You go back to May from when we start, yeah? Then you do a first leg higher, a step. Then you do a next leg higher, a step. Then you do another one up to that 86.75, the one before where we are now. Another step where you go up and down, and we look to be in exactly the same pattern, right? Right now, it looks similar. This thing is
Yeah.
going up in steps, and when the next step is going to come is anyone's guess, but looking at the data in the UK, I may think there is the next one may be coming in not too far a future.
Yeah, exactly. And then we've got the BOE to deal with, and whether they're going to react on the economy or react on inflation. Rather not react with policy on inflation, which is going higher. But I think at some point the itch will get too much, and I'll have to scratch it and just jump in with a little coin, just so I've got something on the table. Right, moving on. We had some data out of the US yesterday. Existing home sales a little bit softer. Nothing that we need to worry about. They came in at 3.93 million from an upwardly revised 4.04 million. Prices staying pretty steady, up 2% from this time last year and up 1.3% from last month. So not seeing any wobbles there, despite Trump howling that Powell is crunching the housing market, whatever. There was a 20-year auction yesterday, which went by without any problems. Half decent auction there. Not that 20s are a big watch point for anyone, but we're always watching to see if there's any wobbles coming in anywhere, and it was all tickety-boo. Besson, speaking on Japan, says that they got 15% tariff due to innovative finance mechanism. It was also speaking about a potential Trump-Xi meeting. Says there'll be nothing before the Labour Day. Also said we're not in a rush on choosing the next Fed chair, and that the next Fed chair will likely be announced in December or January. Now, we know what these guys are like with deadlines and time frames. So December, January is when we could hear about it. No doubt we'll be hearing more stuff about that much sooner than that. Besson repeated that Trump has said he's not going to fire Powell. Besson also sees 1 to 2 Fed cuts possible this year. That'll be slightly less dovish than his boss. And says he has breakfast with Fed Chair Powell almost weekly. I'd like to be a fly on that wall, Kay. Do you reckon they sit at a table, one of Putin's tables that are about a mile long, and they sit at either end?
Are there any such diners in the US where you have those long tables? Maybe, yeah, maybe, or maybe sit in one of those fields where one is sitting on a blanket one end of the field and the other one on the other. Quite surprising actually that they would have nearly weekly breakfasts together. That is somewhere we must say a bit of a strange one, because that could have us make believe that it's all a lot more barking than biting. He's actually yesterday, and I was surprised the market didn't react to that at all when he said about his potential nomination in December or January or so, which means that they don't want to get rid of Powell yesterday. And I was surprised the market the dollar didn't even react to it at all. So where it was clear that the market was nervous about Powell for a long while, is it too nervous about it? Is that perhaps one of the reasons that gold got a slap overnight? But I was quite surprised the dollar did not react to it at all, because that does seem to me, unless something comes out of that GOP thing, which I doubt, honestly. Um, I, I'm going to assume that Powell is just going to stay until the end of his tenure, and let's move on to other stuff.
Yeah, and I actually think it more worrying if the head of the US Treasury wasn't speaking to the head of the US Central Bank on a regular basis.
Yeah. Oh, yeah. We know that Powell and Yellen were talking all the time.
Yeah, exactly. So well, a bit of breakfast doesn't do anyone a miss. But yeah, you're right. It could mean that this is a bit more theatre than the market really thinks is going on. Japan's Automobile Manufacturers Association have welcomed the Japan-US trade deal. They say it not only mitigates a devastating impact on Japan's auto industry, it also avoids the worst case scenario for customers in the US. US automakers not as happy with that deal as the Japanese counterparts are. We got a story dropping from the FT that EU diplomats see progress towards a US trade deal with 15% tariffs, and that's basically what got the euro rocketing up higher yesterday. It's coming to a shorter-term chart because 15% is less than the 30% that has been being bandied around. As soon as that FT piece dropped, you needed to hit the clock for when you got the denial. Then we had Lutnick coming out saying if EU accepts US products and US standards, that will move Trump. And then we got the denial starting up with Navarro coming up talking about potential US-EU trade deal, saying take it with a grain of salt. And then the White House said that EU trade deal talk is speculation unless it's announced by Trump. That they reiterated that only the president can confirm trade developments. I mean, let's face it, Kay, we're on our way to a deal. We don't know when it's going to come. We know what it's going to be around. So really the shock is if they don't get a deal done and it's at loggerheads, or if it's higher than 15%.
Yes, and yesterday, yes, I acknowledged the euro dollar rally on the back of it. But I always said, like, I think the EU deal with the US may be more maybe better for euro crosses than actually euro dollar, and we have seen this ramp higher, and then today it starts to fizzle out a bit. But the euro crosses remain relatively okay right now. I was a tad worried. Was it Lutnick or Besant who said we take the Japanese deal as a model for a potential deal with the EU? And I immediately said, well, I can't imagine EU giving $500 billion to the US to just fool around with to do a very big refurbishment in Mar-a-Lago. But it was Lutnick. Thanks, Mike. Yeah, I mean that would be a complete non-starter for the EU. We're not there yet, right? I reckon, but we could be there a bit like UK style, and now that we see with Japan as well, a structure is close, very close, and that could be announced before the 1st of August, and then the market is probably going to continue to at least underpin those euro crosses in my opinion. But again, I'm not convinced that we need to buy straight euro dollar on the back of it, because after all, let's assume that those deals are done. That means that the US is getting deals done, and I think we should not be overly short dollars on the back of it, apart from some technicals, of course, if they would occur, and some correlation somewhere here or there. But at least, I mean, I'm not really participating in buying euro dollar because of a US EU deal right here and now.
Yeah, very much so. And like I've been saying from the beginning, all Trump wants is deals, not trade restrictions and trade fights and trade wars. And yeah, what are we going to trade after if we get all these deals done? What comes next?
Well, I mean, then we come back to what we've been saying, and you have been repeating as well, even on the Face show. I mean, let's look at the data, and if the US remains, if those deals all of a sudden start to really bear fruit, then it should filter through in the data, perhaps with some delay, but maybe towards the end of the year we are going to start buying dollars again. I think before, when the deals are done, we are going to see, well, the budget, the big beautiful bill has been voted, but has it been put in place? So we are going to need to to compare revenues and expenses. Hopefully, we have a good accountant somewhere in our community to bank on. But that's going to be one factor to watch, and then maybe just maybe we could have a bit of a dollar revival if all things go well for the US, at least for a while. Sometimes, as we say, correlations change. If those correlations change and we see a stock market that continues to do really well, people are going to start to buy US assets again, I think. And after the rebalancing that we are still in right now.
Yeah, exactly. Yeah, Mike, shouldn't trade deals be positive for the
Well,
dollar?
yeah.
Yes, they should, but we've been trading the reaction and other stuff in the US. Trump blowing stuff up, not literally, but
Oh, yes.
blowing rhetoric out. Putting all these tariffs. Look how the dollar rallied against the MEX and the Canadian dollar over the months when all these tariff threats go on, and then the market, the market's first reaction is to go smack, smack, and then, I'm looking at the wrong bloody chart, a 6-month chart for.
Yeah, you're a long-term trader. You could be Greek.
Yeah, we had these big moves, the big tariff moves when he got in, and then April and May, and all this dollar's great, or run to the dollar because it's going to be bad for all the other countries. And then we had the spending stuff, the big beautiful bill, how much that's going to cost, and then fighting over the Fed and what they're doing, and we want rates lower. It's all that uncertainty has been bad for the dollar because it's uncertainty, it's huge uncertainty in one of the biggest economies in the world, and investors don't like that. So should we see a reverse if he gets all the deals done? Yes, we potentially should. First and foremost, as I've been saying, if all this trade negotiation, tariffs and whatnot that are in place are not too impactful for the US, all the firms that are over there sitting on their hands, not investing, capex, lower, not hiring, but not firing, but not hiring, it could give at least a short-term relief boost to the US economy and the global economy. And in that sense, then yes, you're likely to see a dollar rally, and then the market will start getting into what's next. Is this bounce sustainable, or are we going to get back to where we were a year or so ago, where things were ticking along, looking okay, but not going gangbusters? Because it's a bit like the old COVID situation. Before COVID, not many people remember that the Fed were actually cutting rates. And then we had the inflation blip and all that sort of stuff. So, yes, can the dollar recover? Absolutely. But that's going to be down to the data, I think, and what happens after all these trade deals go through.
Yeah, exactly. And the thing is as well, Mike, I mean, we've been trading both ways on uncertainty. Recall that we hit 118 on the euro dollar, and then we went all the way back down to 115 and a half, and yet trade deals were not done, and we were still wondering. So I mean, the market, we're still in this market where you don't trade years long trends because Trump is handling the stuff right, and we've said it when he was reelected. Let's be ready for 4 years of big yo-yos, and I think we are still in this scenario. So if you look at, yes, the stock market is at all-time highs because there is this um, fact that we are going to get probably trade deals, and the market is still is and was under invested, and they because we have seen this big rebalancing of longer term traders into European stocks and then out of or assets, should I say, and out of US assets, which was one of the reasons why the bonds came off a bit in the US as well. But we we still now wait for the next phase, and then the correlations will become clearer again. But for the time being, yeah, you trade the positivity for the euro, perhaps. The dollar a bit lower because of correlations and stuff. But if the US data really hold up compared to Europe and other parts of the world, you are going to see all of a sudden the dollar probably standing up as well. I don't think it's going to be immediate. I think the market still is worried as well about fiscal deficits in the US. But if the data hold up, maybe Q4, maybe the dollar is going to have a big revival as well. But we have to be ready for markets that where the correlations are still evolving from literally week to week.
Yeah, and if you haven't got a trading horizon longer than a few months, then you look at the price action. You know, it's quite clear what could happen here. Everyone's still talking about 120. It's possible. We might just be pausing for the ECB. But if we get after the ECB, over the ECB, whatever, if we get a retest up towards 118 and it holds pretty strongly, then, you know, 120 goes further down the horizon path, if you like, and that might lead to a steeper pullback. You know, this has been a shallow pullback here, but if we bang our head there again, it could be something different. It could get something similar like this. We hit our head, pull back, hit it again, and then we get a significant move lower. Not saying we go all the way down here, but, you know, we could finally get back to 115 or something like that from here. So irrespective of what happens in the months ahead, you can still trade the price action now. And we ain't going to 120 unless we get through these highs here. So, you know, that's your marker from that point. Only other thing was just I had to report was Trump just waffling on. So he will only lower tariffs if a country agrees to open its market. If not, they get much higher tariffs. Since we're getting along with the EU very well with China, in serious negotiations with the EU, and they'll get lower tariffs if they agree to open up. So yeah, right, Kay, the magic question: what are we expecting from the ECB today?
Me personally, nothing. The only thing, and okay, it's just because the market is waiting on it, but I think it's maybe not irrelevant because people are expecting something, but what they can say about the FX rate. But really, I mean, for as long as you're not a 120, 125, 130, whatever, they shouldn't really panic about the FX rate. Yes, compared to the lows, it's probably weighing a little bit on inflation because we know that a strong FX rate is a damper on inflation. But I mean, should they really be worried about it here? I mean, in my personal opinion, not in the least. But yeah, just let's see what they say. To me, uh, maybe it's a bit soon for them to comment on the outlook of a EU deal, but maybe on the other hand, they will say that it's a positive for the euro as well, that there's a potential EU deal. So really, I'm not expecting much from it, Ryan, to be honest. Wait and see, look at the impact, wait for a deal to be signed, and in the meantime, we're still looking at the Eurozone economy, which is not perhaps showing signs of improvement, but not yet there at all. And yeah, up 10 pips, down 20 pips, back in the middle afterwards, and that's how I see the ECB today.
Yeah, the only real risk I see for the euro today is whether we're just holding back from moving higher because we've got that event coming up. I've seen it often enough where the foot comes off the gas pedal. If nothing major comes from the meeting, then it can continue on its merry way. So
Absolutely.
that's something I might be looking for. You know, I'm not saying we're going to be shooting up to 118, but as I say, I've seen it often enough. The market just, you know, pauses and then carries on.
Far away, huh?
No, exactly. And as for the ECB itself, yeah, talk on the currency, Mike. There won't be dovish because of trade stuff because I don't know what way it's going. You know, there's uncertainty. That's what the big mantra's been from all the central banks. We don't want to do anything until things become clearer. Well, have things become clearer today? Not really. We're edging towards a deal, but we haven't got a deal. So that side of things, that they've got no reason to change tack because nothing's become clearer. And really, it's probably more about what they may or what she may say about the future for policy. If trade deals get resolved and 15% tariffs, does that keep the ECB sitting on their hands until we get over this inflation blip or potential inflation blip, or does it give them the green light to keep cutting now that the uncertainty has been removed? It's really about what might get signalled for the latter part of the year. But likely is, as usual, she'll have a taxi waiting on the meter outside ECB HQ, ready to zip her off to the airport. So it'll probably be a boring one, and then they'll all fuck off for the summer. For which really I can't wait, because I do like it when it goes a bit quiet in the central bank front over the summer. But who knows? Right, where shall we go today? We're on the euro, done the euro. Going to look at dollar mex because that's getting a lot of interest at the moment, as we're still messing around at this 1850 level. Just in case you've been living under a rock and don't know the significance of this level, this is why it's a big level. An absolute stonker of a level going back 2020 all the way along. This really is a humdinger of a level, hence why it's so important. A lot of tech down here as well. Just going back to the short-term chart, we are knocking around here. Price action wise, this 1857 level was where we saw support several times. We had a little poke, support, and now we've got the break. Then we broke under this extension low here, 55s. We're holding below it, struggling to get back above it. This price action is looking very weak. So if we can't get and hold back above this 55 level, more so 57, then we have a real chance of giving this 50 a test and seeing what happens. Will it break? Will it fake? Will it hold? Who knows? We can only set our trades to try and cover as many possibilities as possible. Okay, you're short, I'm long and short. But just talking short term, you're short, I'm long. It's going to be crunch time at some point.
Yeah, it's going to be crunch time. I'm not saying it's going to happen today, but it's just, I've been saying it all along. I mean, all those bounces haven't really impressed. Left enough time as well for people to cover shorts. But again, the same thing is in my mind. If you want to be long around here, yes, 1850 is a big level. We don't know what's going on around there because it's still left untested. But I'm a bit as I was already saying, the more people who buy back their shorts ahead of the level, the less there are to beat the level. And is there not going to be a stop run below? Now, I'm not sure whether it's going to be a stop run to 1848 and then we're trading 1855 again. We have been seeing that so often, especially in those emerging markets where it tends to go for a stop run and then bounce. I'm not too sure about it yet, but the bounces are anemic, right? And I'm just like, it's a tiny one, just chip on the table to see if the 00 comes out anytime soon. And yeah, if you want to trade long against it, your stop is relatively clear. I wouldn't put it at 1848 or so, but give it a little more room. But that's just my personal opinion because it is an emerging market and we could do 200 points pretty quickly. But no, don't put it at 1840, of course, because it's that's a bit too far away. But yeah, I think that we are just building up, mate, to go for a test. The next big one is 1818, but there is a bit of a level in between around 1830, and that would be perhaps the next stop, which is over 1% away from where we are, but roughly 1% if we get a break, which is relatively easily done on an emerging market currency. Top side, I'm not going to hold it if it doesn't break. I mean, I can actually do it every day if I want, but because it's really small. But I would be start to maybe worry a bit for real shorts if we start to now break back above 1870. But for as long as we're like 58.60, if that caps, I still think it's perhaps the downside we'll have to look for, especially as I said as well, because the bounces are so anemic.
Yeah, absolutely. And I'm going to show you the difference in two different pairs here that have been largely moving pretty similar. This making a new low, this just keeps the trend on going. There's no real signs. If you were looking at this, you'd be thinking, why am I buying it down here? The only reason to buy it down here is this big, huge level. This is a level that doesn't come around that often and can have some big reaction off the levels. This is one of those levels. It's too good not to trade or try and trade. Now compare that to dollar CAD. As I say, it's been doing the same thing all year. It's been coming down and down and down. However, we've got a different case. We've stopped going down. We've stopped making fresh lows. We're getting the step up of support. Here's the low, step up one, and now yesterday we've had step up number two. Okay, so this is doing more in this period since June in trying to stop going down than it has done since the high in February. Okay, so that's the sort of price action you want to look for. It's obviously obvious when it doesn't go down anymore, then the trend might be changing, but that doesn't mean it's not just pausing and then breaking down again, a bit like the MEX. It had its little bottoming moment and now we've got new lows again. This isn't doing that. Does it mean it can't go down? Absolutely not. This can still break down, but now we're getting some. It's harder now for sellers to get this going lower because buyers are now coming in and they're coming in from that low here and they're coming in from that low here. So we're more balanced. We've got a more balanced market now in this one. But unless we're breaking up above 137.50s, more so this fib, then we're not even really going to start eating into this year's trend. Okay, this is just this leg from May, so it's pretty short term. But it shows you that we may have stopped going down. Yes, mate.
Oh, no. Go ahead. I was just
okay. Yeah, so that's the difference between the MEX and dollar CAD. I'm still long a little bit. I'd like it back above the top of this zone. I would have liked it to hold the top of this zone to give it a bit more of a springboard to maybe go back up to towards these highs. But as I say, we've got this step, so that is a bit comforting, and we've got to hold at the bottom of the zone. This 136.50 is really a massive pivot level now. If we bounce up to there, hold it, then maybe we're shifting to then go and have a crack at these lows and seeing if we're going to push lower. So really, you got your range from this low 135.40, take into account these, and then up to 137.55 and take into account these up here as well. So plenty of room to trade the range, and as I say, use that 136.50 in the middle. But the wider picture, we're going lower if we're likely breaking here. We're going higher if we're breaking and holding above here. So that's all you need to do. And 3 levels, that one, and the one in the middle. And you can make your choices based on that. No guessing needed. Ali, did I look at Euro Sterling? We looked at it quickly,
Yeah,
Euro Sterling, earlier. Again, if there's nothing from the ECB in the markets, just waiting to get over that, this could be heading for a little push up. Certainly, there's no reason on the UK side why you'd want to be buying a quid. But if there's anything little dovish, that might give me I might have to scratch the itch at that point. Who knows? I need some ointment soon for the itch I've got for this one. Right, Cage, looking at the clock. Going to ram it over.
Yeah, I'm just going to show just a couple. Fred was asking about Sterling Aussie. Just going to have a look, and I'll have a look at your Euro Swiss as well, Ali. Sterling Aussie, that is coming into pretty decent support there. And I'd say a bit dangerous. Why? Because we have both a revival in the Aussie, as we can see, because the Aussie is trading pretty big, and UK data and a bit of stress on the fiscality, what's going to happen with Reeves, etc., in sterling as well. So we are coming close to a very decent support, which is here at 204.40. It's also already, and it's a daily, so it's a pretty long-term one. It's also been traded already on the around the 15th, that level, and from there we bounced. That's a pretty decent level in my opinion. If we get a move below and a close under 204.40, I think we could at least go for 203, 202.95 you see here, which is actually the prior high as well. So that is the risk here, I think, right here and now, just because the two are moving a bit opposite of each other as well at the same time. And so that's a bit of a risk here. And also, it's a prior low here. It's not too far the prior low there, so it looks a bit fragile to me. Now, obviously, 204.40, 204.50 if we hold, and it could also very well bounce. But be a tad careful for a potential break. Okay, in the sterling Aussie, euro sterling. No, we have done the euro sterling. Pop. What was I going to watch? Yeah, quickie on the dollar yen. See, we had a quick blip here below. Well, it's actually, if I put it right on the levels, it was really not too far below there. A quick one below 145.95 and bounced. And now we are heading back towards this 146.80, 146.70 or so. It is, and as I said yesterday as well, a deal or a structure of a deal is in the making, but it's not signed yet, and we still have a political mess or potential big political mess in Japan. I don't think, and I'm just going to repeat what I said yesterday, I don't think that yen is. Yes, we did the move and the expected trade deal, etc., and buy the rumor, sell the fact on the elections, whatever you may call it. But to me personally, I don't think we are ready yet for the big drop or the big rally in yen, because you have dollar yen, but then you also have euro yen. And euro yen, for instance, it has been trading a little bit lower, but we are already back in the 172s. To me, that is still not a bearish picture. Okay. Yes, we've broken below the trend line, but you know my view about those trend lines when they are too steep. But this, as people would call it, could be developing a bullish flag. Get above 172, 50, 55, that thing could actually pull higher again. And that's going to be important for today as well, post ECB, because imagine that we are in such a scenario that Ryan just said, where the market is building in a pause, which is perfectly the case right now. I mean, if you look at euro dollar, is coming off a little bit ahead of the ECB announcement. The crosses are building in a pause. Euro sterling rallied a bit on the back of the PMIs coming in weaker, which are still above 50, by the way, in the UK, but still, it is weakening. But we could be in this scenario that Ryan says, like the market is building in a pause, and then we will see what's going to happen with the euro once we are over this ECB hump. If euro starts to make headway again on the crosses, then especially that in turn will probably underpin the euro dollar as well. But watch out for those crosses, because they could go for a walk higher. Okay, obviously anything more dovish or saying like, oh, we think that the FX has done enough, then perhaps we will see bigger declines in those crosses. But it's not my base case right now. And people were asking about the Aussie. We're above this 66. We're above the prior high. Okay, but look at this trend line. We ran into trouble right into the trend line, and that is around 2025. Call it 25, okay, on the Aussie dollar, which is also a bit of a level that has been traded in the past. So yes, we are above 66. Yes, it can push through. We also have US PMIs, by the way, so be a bit careful about those ones. But we need confirmation, I think, still above 66, 2025. And then we can think about high 66s, where we find this level back, which is the November high. And then potentially a move up into the 67. So yes, we are pushing higher. Yes, the commodity currencies are doing good, but we still have, it's a step-by-step process. If you, we've tried it twice now this morning, and it's capped. Maybe until the US PMIs get a bit of a weaker PMI, this is going to be toast, I think, and then we go higher. But be careful, because we do have still levels. Okay, Kiwi also very big, but also here bit of a traffic zone right above where we are. So be a tad careful over there as well. With follow through or lack of follow through. 60, 37, 60, 30, 28. That's going to be the first support here on the Kiwi. For as long as that holds, we still have potential to move higher, but we need to hold the levels. And on the Aussie, it's relatively simple. 66, get a close above or below, and the market may be happy or disappointed, right? Just one last word, gold. As I said, two very, very strong US sessions with heavy buying. Yesterday we were monitoring it. We were talking about it live as well on Face. And usually by then the US had already started to buy gold. Yesterday it didn't. So the demand dried up. Then we had this potential US EU deal outlook coming as well, and the floor really fell out of it, and we are already, that is pretty severe move. We are already below this 33.70-75 support, so the trend line is now coming back into view. Give and take a few bucks, this is 33.35.40. Okay, we have done this in the past. That we're gonna slowly below and then ramp higher again. But again, this is one where people are looking at hedges. But what do we need to hedge against? And if those hedges are not there to be had, these are the kind of moves that we had. But again, be careful if we even would trade a bit below and then bounce back. That would still mean a higher low. But for the time being, I am not going to catch a knife in this one, because of the outlook on and the potential outlook on trade deals. So be a bit careful for gold today. I think that if we get back somewhere around, if we get like this early US session, perhaps a bounce back just above 34, we could run into trouble here and see a next leg lower. So for today, I'm not a gold bull. And yes, Ali, is there life? Is there life in the Euro Swiss? There could be life in the Euro Swiss, mate. We need to. It is trading around there, 39.40, 93.40. We have been trading there very often. I'd love to see it hold to continue to push higher. Okay, but again, overall speaking, very good hold below 93 when seen. And with that, Ryan, back over to you.
Thank you very much, sir. Good stuff as always. Right, be very careful over the ECBs in case any surprises. Take care, have a great day, and we shall see you tomorrow. Have a good one.